my best to answer the question at any time. And so the main thing I wanted to cover today, and it's weird to see me everywhere, but okay, main thing I wanted to cover today is one mistake people make when they trade with multiple time frame. I see many people who try to have many time frame. They try to have many things they look at. So they want to look at the 1 hour, the 4 hour, and the daily chart. Okay, that's fine. But people are making a huge mistake with that sometimes. And I want to talk about this today. So the one mistake people make is that they're going to look at a small time frame. They're going to be in the smaller time frame, trading, trying to find setups, and then they're going to want to have confirmation from the higher time frame. Okay, so it goes with the 1 hour chart. Then they're going to look at the 1 hour all the time until they see a setup, and they're going to see, well, let me check if this is good in the 4 hour chart or the daily chart. Then they're going to go in the daily chart, and then they're going to see, and they're going to say, oh, it's not in alignment, so I'm not going to trade. Or they're going to wait to have the perfect confirmation, the perfect alignment. And this is the biggest mistake. Nice. So I see people joining me live. So thank you guys for joining me. Here's the biggest mistake. People are gonna go in the smaller time frame and then go higher. So they're gonna do 1 hour. They're gonna spend all their day looking at the 1 hour chart until they see a setup. Or they're gonna spend all their day looking at the 5 minute chart until they see a setup. Well, and then they're gonna want to confirm, make sure that it's in alignment with the daily chart or the weekly chart. Okay, that's the mistake. Now here's how you have to do. When you look at any chart, okay, the first thing you should think about is you're gonna look at the daily chart or whatever time frame you wanna have confluence with. So the main time frame you're gonna have, you can look at it, and then you're gonna identify zones at which you wanna trade. So on a daily chart, that could be as simple as a support or resistance zone. You identify this, you know what zone you're gonna look at, and then you don't do anything. You go away, go outside, do something, and then you put an alert on your chart so that when the alert like gets on, and when you get the alert, then you go back to your desk. Then you say, okay, the alert is on, so price is at the right zone now. If price is at the right zone, it means I have probably to watch. So then you watch the chart, then you watch the market, and then you figure out, do I have some evidence that price is gonna do something, either reverse or break out at that level? And then you look for evidence on the smaller time frame. But this is much easier and much less painful and less time consuming than going on the smaller time frame, trying to see everything that's happening and wanting to have confirmation with the higher time frame. If you do it the other way, people make the mistake, and I hate that because they're gonna spend a lot of time trading. They're gonna spend like all their day watching the chart until they see one setup, and then they want to have confirmation. While the opposite is much better. You look at the daily chart, put an alert at whatever level you want to trade, and don't forget that the higher time frame should be only showing you the levels at which to trade. Okay, that's the only thing. If you wanna trade a trend on a weekly chart, go look at pullback levels, and that's gonna be your level. Or if you wanna trade a range, go look at the highest level and the lowest level on that range. That's gonna be your zone to trade. Okay, but don't look at like everything in between. So the higher time frame for the zone, then the lower time frame is gonna be to help you determine what's happening. And really often, what you're gonna have is you're gonna have like you're gonna be at the resistance zone on the daily chart. You see the resistance. That's great. Now, what you're gonna do is you might want to look on a smaller time frame when price gets at that level. So you have your alerts. You're gonna be there at your computer at that time because you know it's important to watch now, and you're gonna look for, let's say, a breakout or a breakdown. Because if you know that price is gonna come back to resistance level, it's usually gonna not just go up and go back down. No, like that doesn't happen. Most of the time, it doesn't happen. So it's gonna go at that level, consolidate a little bit, then maybe do a breakdown on a small time frame. You look for that breakdown. That's why you trade. That's what you trade. So that's gonna give you a much better reward to risk, and that's the biggest advantage of trading the smaller time frames. You have a better reward to risk. And oh, this is the other mistake, by the way. And I didn't plan to talk about this one, but people who are gonna trade smaller time frame, or they're gonna trade multiple time frame, they're gonna say, okay, I'm entering on this trade on based on the daily chart. I've identified the level. I know what I want to enter. I have a nice setup on the 5 minute chart. So let me enter on a 5 minute chart. Okay, fine. But then the mistake they're gonna make is that they're gonna see that 5 minute chart and they're gonna put, let's say, 10 pip stop loss on a 5 minute chart. They're gonna say, okay, I put 10 pip. So my reward, my return, my take profit is gonna be 20 pip. Okay, whatever. But guess what? That's not how it works. When you do multi-time frame, the biggest advantage you have and the biggest reason why people do multi-time frame because they want to have a higher return. They want to have higher reward to risk because you're usually going to place your take profit based on the daily chart, not the 5 minute chart. If you place it on a 5 minute chart, you're taking way too much time and way too much pressure on yourself to look at all the time frames. Okay, it's not necessary, but that's why people want to do multi time frame because you can trade a smaller time frame, have a small stop loss, but take your profit and put your take profit on the higher time frame. And let me just read the comment here, guys, because I see a couple of comment. Nice. Thanks, Steve, for watching. If you're still there, thanks for watching. That's awesome. Biggest mistake. Aggressive and I can't hold trades. Yeah, exactly. Far as I'm saying, is kind of aggressive when he trades and he cannot hold trade for a long time. That's a big one, and I'll probably talk about it on Friday, so tomorrow for the Q&A. But here's the thing: you have to get away. You have to do something else, right? You cannot stay in front of the chart. If you stay there, you're gonna screw up yourself, and you're gonna put all this pressure on yourself to perform, to look at what's happening, and you're gonna close your trade way early. Again, I did the experiment once. I said, okay, let me just trade and let me just go away. Okay, I'll just go away. I won't do anything. I'll just put a take profit, do something else, and then I would come back. I would have like let's say I had a loss. Okay, that's fine. I have a loss, like not too bad. Or I would have a profit. Well, I guess it's fine. I have the profit. But the thing is that if you stay there, you become way too involved, and you're gonna want to make changes. You're gonna see, wow, this is a big engulfing candle. I should maybe close the trade. I should do something. Right? That's not normal. I have to close the trade early, and that's why I do not look at the chart now. Okay, you could see me now, and it's 1:23 p.m. now. You could see my desk around me. There's no chart. Why? Because I don't need to have charts now. I'm doing this live, and I don't care about everything that's happening there. I'll just have my take profit, have my stop loss, and whatever happens is gonna happen. Okay, I don't care, and that's the problem. The biggest reason why you cannot hold your trades is because you're too involved and you spend too much time watching the chart. Yes, that's the biggest thing here. So that wasn't my plan to talk about this today, but anyway, it happened, and I'm super happy to talk about it for sure. But let me just see on YouTube if there's any comment. Sounds good. Wonderful. So I hope you guys get a good idea of what multi-time frame is, right? You look at the bigger time frame, you look at what zone you want to trade, then you put an alert, and then you go away. You do whatever you have to do, whether that's work, whether that's hanging out with your family, enjoying Thanksgiving, like whatever, you do that. But don't look at the chart. And then when you get the alert, either on your phone or something else, well, then go look at the chart. Go watch what's happening, and go look at setups on the lower time frame. But don't spend your life looking at smaller time frame. And I just had a notification here. Don't spend your life looking at small time frame, trying to find setups, right? And then looking for confluence on a higher time frame. That doesn't work. Like that's a receipt for spending way too much time trading and not focusing on the right stuff. So if you guys have any question about this, let me know. I was trying to do live in a few places today, so we'll see how that goes. And we'll do, as always, a Q&A every single Friday. So tomorrow at 12:45 p.m. Eastern time, we do the Q&A. So I'll probably see you guys there. And as always, reach out to me if you have any question. I'll do my best to help out. And we did a webinar yesterday, so I was super happy to get some people there. And I shared a couple of great things. So if you guys were in the webinar, if you subscribe, go watch the replay. And I look forward to see you there. So thanks for watching, guys, and I'll see you pretty soon.